He's on fire.
All right, you are live. Say hi as we let people
Hello.
in.
You got it. You got it.
We got a quiet crowd today.
Come on.
I
Go
know.
right ahead.
Hi, hi, hi. Happy Wednesday. Thanks for joining.
Hello, everybody
Play.
from Florida.
Well, that's
What's
Martha's
up, Martha?
voice.
Hey, guys, how are you?
He
Yeah,
Martha
we're
bless.
amazing. We're
Good.
amazing.
We
Great
got
stuff.
Latanya on the chat.
Yeah. Latanda, I love it.
We got
Hello
four
to you too.
sessions.
Well, we had a great meeting in Atlanta last night.
We are going to
Eric, we need your enthusiasm, brother.
okay.
He wants a
Yes,
bro
sir.
hug.
That's all right, a bro hug. We had the first ever bro hug last night
It
at
wasn't
training.
the first one. What are you talking about?
That's awesome. It was a great evening.
It really
Well,
was.
you know what, guys? Listen, this whole thing is a gathering of eagles. It's a gathering of champions, and I see that happening. You know, I see that when I see a leader, I see 100 people. I see 1,000 people, and I know that happens, and that's what's happening, and that's what we've gathered in Atlanta. I got a message from James last night that was just very fitting about just how excited he was at being at last night, because it was you might as well have 1,000 people in the room, because that's what's inevitable coming from what's in there. There's no way that each person in that room last night won't have 100 people active in the business by the time 90 days or the end of the year rolls around. And that, I know that. And so that's what we've got here. There's not a better group. Everybody's ready to go. So without any further ado, this is Wealth Wednesday. We appreciate you being here. This is Jody Humphrey. If I've not had the honor of meeting you, we appreciate you, and glad to be part of this leadership team here with my fearless partner, Kimberly Odie. And she's fearless, but she strikes fear in the heart of many. She's powerful. She's focused, and we got a great program lined up for today. Now, today will be, and of course, we got the great Mauricio Garcia here. That he adds so much to everything he has, and his value becomes more apparent every day in the tools that we have. But we're going to be action oriented. Whenever you hear this, you ought to make it a game that when you hear this call on Wednesday, that you, by the end of the day, I see you, Tim. Thanks for being on. I'm going to go right to you 1 second. But he's up with Corbridge. But if at the end of this call, this should be a game as to how many times you can tell what you hear today to somebody else on Wednesday, as many as you can. That ought to be what you do. And I do want to go to Tim real quick, because he is in the middle of the meeting in Corbridge that I was supposed to be in, but stayed here because we got so much stuff going on. Tim, can you say hello to everybody real quick?
Sure can. Hey, Jody.
Thank you.
Yeah, let me give you a quick kind of update. What's going on? Like Jody said, I'm up here in Boston with Corbridge, having some great meetings. I think they disclosed today that they're doing a merger with Equitable. It's going to take place somewhere around the 1st of January, 2027. So they're going through all that and explaining all that, which is very exciting, actually, because it's going to make it one of the largest financial services, life insurance and annuity company in the world. So very exciting news. This should be the last merger that they'll probably have too. As we know, they merged from AIG, actually went public into Corbridge, and now going to merge into Equitable. So this is a great time for them, and going to bring some great enhancements that are going to help HCI as well. So just wanted to do a shout out to them. So real quick on the market, what's going on today is quite interesting. Always focusing on what's going on in the Middle East at the moment. The whole Strait of Hormuz thing is still it's up in the air. I think that's the only thing that's worrying the market right now. I think we've got a lot of good things still going on with AI. It's driving it's the undertow. Earnings. We're getting through earnings season. Sorry, Jody. I'm sorry.
He's calling his wife.
Anyway, it's driving the market right now, keeping kind of control on everything. Oil prices are back up. That's the main handicap I think we're dealing with right now is what's going to happen there with Iran as far as they're wanting reparations from the U.S. U.S. wants reparations out from them. I mean, it's just a cluster of who's on first over there. So until that really gets sorted out, I don't think we have any direction in the market at the moment, which is great for what we do. I think that's the underlying message I want to report to everybody is, the products we sell are really based on protecting families, creating wealth, saving the wealth for people. And as we watch all this roll out in the Middle East, I think this is giving us a better definition of what we do and how important it is what we do, because politics aside and what's going on in the markets, we offer protection and a safe haven. We offer safety for people and products, and our whole basis here is a percentage of your assets should be in a protection baseline, in the foundation of protecting people, and the IUL and index annuities. These are all featured products out there that protect families. And you can't say it enough today, after 17 years in a bull market, we are going to have a correction. I talk about this all the time. Don't know when it's going to happen, but it will happen at some point. And we're going to be perfectly positioned to help families also, because when that hits, you've got that safety net, you got that zero protection. And at the same time, I just heard Sobita talk about how important it is when you hand over a policy, a benefit to a family when somebody passes away. Man, it really zeroes in on what our jobs are about and how important it is what we do. So I just want to report back that keep doing what you're doing, because your role in this world and in what we do is so vital and so important to families. So anyway, Jody, just a quick reference to what's going on in the market today, and I'll turn it back over to you.
Thank you so much. And it's so exciting to be up there. And guys, what I love about what we do for the consumer is that it's just this battle between carriers. We don't go out and say, oh, we're going to be with one company. Whoever's the better at the moment you sell a policy, whoever has the best product at that moment, that's what you should sell.
Hey, one other thing, Jody, real quick.
Yes, sir.
We as you know, Jody, we don't tell anybody to sell one product or another. We really don't care. We're product agnostic, right? And one thing about the companies we have, it's really the people. One thing I learned, and you learned, and I think it's so important to stress this, that it's not about the product, it's about the people behind the product, because they're all trying to make the product and what they do better. They're constantly striving to improve things. And that's the one message I'm getting up here from Corebridge. And it's the same with North American. It's the same with all the companies we represent. And I'm so proud just to say that that's the beauty of our industry, is we have some great partners.
Absolutely. Couldn't have said that even any better, and I appreciate it. Thank you very much, Tim. But they are,
My pleasure.
He's exactly right. And all these companies, if you are stepping up in your business as much as they are stepping up in their support of your business, then you're going to be a multi-millionaire. They're holding meetings, spending money. How much do you think it costs to take 25 people to Boston or to wherever else they take us on these other trips just to have this great retreat? They spend hundreds of thousands of dollars. They got people full time that are here. They're paying people $250,000 a year to come just help us, to use all these resources that we have. And they're all stepping up. I mean, I have to decide, do I listen to North Americans training today or Corebridge's? Because they all got bombshell announcements. None of them stand still. North Americans making a big push right now in the advanced markets. deal where if you got wealthier clients, they're stepping up in a big way. They went and hired a guy who's the best in the industry at advanced markets. And I don't know what those guys get paid, but I got a feeling there was some significant money to get the guy over. So they're doing that, and then others will respond, and then others will respond. Man, that's exciting for me. I don't know all the details. Some of you guys hear that and you're like, oh, I got to go hear all the details. I don't know any details. You just heard the same details I heard. I'm able to take it on face value, and now I'm going to go work like I have the faith knowing that that's good. People smarter than me, Tim and Steve Gross and those guys with Dad overseeing it, they call the shots on that. First of all, you're worrying about something that you have no impact on. You can worry about it all you want. There's still going to be the companies they're going to be. We're going to pick the companies, so that's exciting. Now, today, what we're about to go over is going to be a preview of what's going to happen on the 25th. And 25th in Atlanta. It's also going to be Zoom throughout the country. But if you're in Atlanta, we don't want you Zooming it. We want you there. And you want you in office because we got to really flex and have a few hundred people that will be there. But it's going to be about the fundamentals, and which we're not going to go into a whole lot of fundamentals as far as money in general, but we will at that event. And we'll also be talking about living benefits and how powerful that they are. But man, the power of the IUL, the power of it being called the financial Swiss Army knife, when we first started as a company, all we had was term with living benefits and IUL with living benefits through Corebridge, through AIG. That was all we had. That was the whole thing we started the company off of. So that concept is what built everything that you see. And that's how powerful it is now. What's happened is we got so many other things going that we kind of sometimes shift our vision from a money-making point of view, from a company building point of view, and from the consumer. Pretty good thing. IULs are the product of the decade. They are the best thing going in the world for the right person. Now we're going to talk about that today. Kimberly's going to lead the conversation along with Zach, and then obviously anything that Mauricio wants to add on this as well. But we're going to dive into this, and we're going to really kind of peel back the layers some on this as we go through today. So Kimberly, take us away.
Awesome, thank you. Well, I'm not really sure where to start. I have so many different pieces that I want to talk about. I think first of all, let's talk about what does an IUL do. So on August 25th, like Jody said, instead of having a big event where we have multiple products or multiple concepts, we're just focusing on that. So of course we'll talk about living benefits, but we're really going to focus on an IUL and what is it used for and what does it do. The other thing I'll tell you guys is if you aren't using ChatGPT for your business, you need to start. Your clients are using it. Every single client that I've spoken to recently, especially about annuities, are coming back to me and says, well, chat says this and chat says this, and I'll make a decision once I finish talking this through with chat, right? I love chat just as much as the rest of you, but you should also be putting your information in to chat and asking questions so you can articulate it better and you can get stronger and more confident, because that's what your clients are doing. I promise you, they're fact checking you. They're not even Googling, they're just asking chat, what do you think? Right? And this is what it's telling you. And depending on how you phrase the question, depends on how it answers it, right? Is this a good thing? Is this a bad thing? Well, they're going to tell you. I always tell all of our clients, you find exactly what you're looking for. So make sure that you give enough education and that you are educated enough and confident in your conversation that maybe they don't have to have so much third-party validation from somebody else, because it's not coming from you anymore or anything you feed them. It's coming directly from someone else. So with that being said, in my 1 minute thought process earlier, I was like, chat, what can an IUL do? Tell me all the things, right? And then, of course, it gives me all these bullet points and it says, this is how I would present it. If you'd like, I can make a flyer. I was like, yes, please. So literally in the course of a minute, I have this amazing flyer. I'll put it out in WhatsApp in a little while. It's totally compliant. It's fine. But I'll share this with you guys. But what can chat do? Can you guys see it, or do I need to zoom?
Zoom a little.
Good? Might need it.
Yeah.
Okay, I can do it. All right, and I can scroll it now too. All right, so 20 ways to use an IUL. More than life insurance, it's a financial tool for life. When properly designed and managed, right, we've got a little disclaimer in there, an indexed universal life, IUL policy can help you protect your family, build wealth, create options, and leave a legacy. So in what area do we use this? In the past, we've talked about when does an IUL make sense? And, we've said take your age plus a zero, and that gives you a retirement income stream. But really, it's take your age and double it plus a zero. And that's really going to give you the income that you're looking for. But there's so many people that can't afford to do that. Does it still make sense for an IUL? As long as they understand what they're building it for and the purpose for it, yeah, absolutely. So let's talk about that here. So step number one is an IUL is built to protect, right? It is to protect what we've already built. So what can it help you protect? Family income protection, which we know life insurance is great with, mortgage and debt protection, living benefits for qualifying illnesses, key person protection for a business. So all of those things, when you hear that, you need to say, is an IUL appropriate in this situation? Step number two is accumulate, build money for tomorrow while protecting today. So it can create supplemental retirement savings, right? We talk about that one a lot. It can create tax deferred cash value accumulation where that money is growing, without taxes, and hopefully it's got tax-free access. It can create college and education planning. I don't know about you guys, but to me, the difference between this and a 529, this gives my child the ability to make a decision when they're 18, 19, 20. What if they don't go to college, right? Now our world is changing. So trade schools are a big thing, or social media, or entrepreneurs, or all of those things, right? So what if they don't use the 529 funds? This gives them a different alternative with similar benefits. Building long-term opportunity funds are great ways to use it to accumulate. Now, what can we do once we've accumulated it? We can access it. So we can build money that you can potentially use along the way. So we have emergency liquidity. If we need to use it as an emergency fund and we have cash value there, we can reach in and pull some of it out. Obviously, if we don't pay it back, that's a different conversation on how it affects what we intend to do it for. But for some of your clients that can't afford to invest enough money to build an income stream, maybe that's not that conversation. But maybe it's the life insurance protection and the emergency fund that they need one day down the road. It can help them with a home purchase or a down payment for a home purchase. It can help with business opportunities and expansion. It can help with major purchases and life events. We've heard of be your own bank strategies a million different times. That's exactly what it's talking about in that access column. And then we can talk about distributing it. So just distributing it is going to create another potential source of retirement income. This is the one that we talk about a lot, right? Tax-free income at retirement, things like that. A supplement to your 401k. If you don't have a 401k, then do this instead. So supplemental retirement income. Early retirement bridge income. What if I'm 55 and I want to retire, but I can't access my 401k without a penalty until I'm 59 and a half? Where's the money coming from? If it's in my IUL, I have the ability to pull it because it doesn't have that time limit, right? Like on some of my qualified plans. Tax diversification in retirement. We know most people invest their money in a 401k. We know that, right? Because that's what their company gives them. It's hopefully got a match. It's what they know. It's what they hear. It's what they're comfortable with. Awesome. That is taxable. We have no idea what taxes are going to be now or in the future going forward. So let's hedge our bets with some tax-free or tax diversified options as well. Income flexibility during down markets. So if we've got a lot of money in our 401k and the market tanks, we just heard Tim say we are going to have a market correction. We have not had one in 17 years. A healthy market is every 8 to 9 years and has been historically for our entire world, right? So it's coming. Who knows what's going to happen when it does? So if the market is down and I'm accessing my investment accounts, do I want to pull when it's down? No. So then I have the ability to pull it from my IUL, because remember, IULs have floors. That money's not going to lose. And then finally, we have the ability to transfer it. So we can turn what you've built into what you leave behind. Income tax-free death benefit. Huge, huge, huge. One of the things to think about, like most of the time when parents pass away and give money to their children, they're older, right? Let's say 70s, 80s, 90s, and their kids are in their 50s, 60s, 70s, right? When they pass this money. Well, if you're in your 50s or 60s, you're probably in your highest income earning time of your life. And if your parents are passing qualified plans to you, what does that do? It increases your income when you distribute that, right? So a tax-free death benefit coming to you through an IUL or something like that is going to be more favorable for your children as well. Generate wealth and estate planning, or generational wealth and estate planning, charitable giving and legacy planning. You're somebody that you want to have $100,000, great. Create this permanent life insurance piece, or give them 10% of your death benefit and give that to charity when you pass away. But you have all of that inside this one particular product, and you don't have to decide exactly how you want to use it when you build it. If I'm building this for retirement income, that is my goal. But if I have an emergency and I need to reach in and access some of it and I have it in there, I can do so. So it's flexible. We hear that all the time. One policy, many purposes, a lifetime of possibilities. So I like what it says. Like, you can read this down here. I think it's important to see that it threw the disclaimers in there too. I didn't ask it to, so that's just a chat thing, I guess. But an IUL isn't simply about dying with life insurance. It's about protecting your family while you're building wealth, creating access to money while you're living, generating potential supplemental income later, and ultimately transferring wealth to the next generation. And then it's got your benefits, riders, availability, costs, qualifications, vary by carrier and policy. Like, it's got that little disclaimer over there. So I think this is a great just everything slide. Like, what can I use this for? There's so many options that maybe sometimes we don't talk about it, right? Maybe sometimes we don't tell our clients that. I know, like we said, we're going to have this IUL conversation in Atlanta. I know the next week, Zach and I are coming back and we have a bank on yourself, infinite banking conversation with a real estate brokerage the next week in Atlanta. They all want to talk about this. I know the end of September, I have an event in Charleston that, somebody wants me to speak on 529s. I don't sell 529s. I don't really want to speak on it, but I will speak on it as long as I can speak on IULs too, right? And I can compare and contrast it for them. So I'm telling you that Zach tells me I shouldn't give GPT all the credibility. Y'all should think that I create those. You like that too, Jody? Did you say that first? I just want y'all to know. I want you to know because I want you to know you can do it too. I want you to know that this isn't coming out of my brain and that I have zero idea how to make something look good on a visual screen. I have zero idea. So I'm not telling you that because it's not all stuff that I know, but I'm telling you that because our world has to be simple, and our world
But
has
you
to
know
be
how to double check for accuracy. You know how to read it. If people go say, Chat GPT, make me something, and it makes them something that's inaccurate, and they don't have the knowledge to double check that, then we could be putting ourselves in a bad place. So that was
Yes, you do. Yeah,
okay.
I think just
Compliance.
from that point of view, yes, do not ever go use a presentation that you have come up with on ChatGPT to go talk to a client. That's fair. I mean, that is not even what she was saying, but yes, Zach, you're exactly right. No, do not do that. And it's great for this conversation because this is a marketing piece and it's great ideas. And she guided it to what it was. And we're going to show you some things in a minute to where there are pieces that we already have. So we're going to talk a little bit about the comparison of things that are its verses, and also some things that other people may say to try to sway you from, going forward. So let's do the core concepts page, if you don't mind, Kimberly.
Yeah,
Next.
sure.
There's a presentation in the back office called Core Concepts. Fantastic piece. Tremendous piece. We even got a video of it on our YouTube page, I believe, of Zach doing this presentation. So it is a great fundamental conversation. Roy Hadaway, one of our great new guys, his presentation he uses, but on it, it's got a little checks between what it does as compared to a qualified plan.
So just to show you guys where to access this, if you're in your back office, under help and resources, you see that at the top of the screen. The first tools and resources on the left-hand side. You can click see more if you want, but it's under marketing materials digital. So you've got all of these different brochures back here. As brochures are created and compliant, they will be put back here as well. And I pulled up some of them earlier just to look at this. So we have an Understanding Index Universal Life brochure. If you haven't looked at it, I would suggest you do. This is digital, so you can email it, you can text it, you can print it, you can do all these different things. And I don't know that it's necessary for you to have or for you to give to your clients, but I want you to know that you have access to it. So all of these things that basically just explains how an IUL works is back there at your fingertips. The one we're going to talk about today is this one called Core Financial Concepts, which is here, right here. And this is the one that we're going to look at. So through this is a great presentation that we can have to educate people. So if you're in, let's say a lot of people have small business owners, and a lot of people are like, oh, I'm going to go and talk to my small business owner, and I'm going to help them with key man insurance and executive bonus and blah, 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 blah. And I want to help them with their plan. Awesome. We want you to do all of that, but don't forget about their employees. I mean, right? Like you've got one business owner, but they might have 20 employees. Meet with every single one of them. That is easy. To me, that's an easy made prospect list if you have a business owner. But this is something you could easily come in and do. Zach and I, when we were teaching, when we first transitioned into this industry, we would do at the teacher meetings. I don't even remember the faculty meeting. I was like, what were they called? Faculty meetings. We would get up and give just like a 15-minute educational speech. People like that, right? Employers like that. They like educating their clients. Use this. This is fantastic. I'm not going to go through every page, but I'll kind of read the highlights. So core financial concepts, that's what we're talking about. We need to take control of our money. These are some of the ways that we can do that. These are the 6 steps to financial security. I will read these out to you. If you don't know these off the top of your head, you need to memorize them, or you can say them in your sleep, because this is what we do for families. Step 1 is we teach people how to increase their cash flow. Most people's problem isn't they can't manage the money that they have. It's that they don't make enough money. Right? I can only squeeze my budget so many times and cut my cable bill or now my streaming services, right? My 50 streaming services so many times. And then it's still a how much money am I making conversation, right? So we have to increase our cash flow. Step number 2 is debt management, controlling debt. Most people's number 1 goal is to get out of debt. So we want to give them advice and education to help them do that. Step number 3 is create an emergency fund. So those credit cards don't become the emergency fund, once you have an emergency, because unfortunately we all at some point will have an emergency where we need lump sum money that we have to access. Step number 4 is proper protection. Here we're talking about life insurance. We're talking about health insurance, because we can do health insurance as well. We're talking about Medicare, all of those protection pieces that we have access to, making sure that your family is protected if something were to happen to you, whether you get sick or you die, which is all super fun to have a conversation about, right? And step number 5 is building wealth. That's what I call sexy money. That's what people want to talk about day 1. Nobody wants to buy life insurance. They want to get rich, right? But we have to make sure that step 1 through 4 is in place, because it doesn't matter how much wealth we build for them. If they have an illness or a diagnosis, or they have a major emergency or something like that, then they're going to just have to pull from their wealth. So we want to make sure that we really build that foundation on their financial house. So we're building on solid ground. Building wealth is what we can use for annuities and IULs and manage money and all Cal Choice and all the different things that we have access to help people grow their money. And then preserving wealth is, wills and trust and making sure people have financial and medical powers of attorney. Why would you ever probate a will if you don't have to? It's so much cheaper just to do a net law, even if you don't have anything but a house, right? If you don't have anything but a house, when that asset transfers, if you don't have a trust, you still have to probate it, right? So why would you not just do a net law to make sure at least that's taken care of? So those are the things that we talk about with our clients. Financial prioritization. What should we focus on first? Obviously, we should protect everything first, and then we go up, to the top of what our wants are and things like that. We go through here on the wealth flow formula. You've seen it called the X curve. When do you need life insurance? Why do you need life insurance? What type of life insurance do you need? Whether you're young or you're older, what's the goal with that? By term and the rest in perm. So this is the concept of term and IUL. We don't typically advise to have, $2 million IUL death benefits because it's very expensive, right? So we use that IUL for more of that cash value growth and what we're looking for, and we protect the difference of the life insurance need with term. That's what this is explaining. The dime, debt, income, mortgage, and education. How much life insurance do I need? It's right there written out for you in this example. But if you're teaching it, you're teaching people, in front of a room, they're like, oh, I'm way underinsured, because they're all way underinsured. Magic of compound interest, how money works, how money grows, how it works for you if we're talking about investments, or it works against you if we're talking about credit cards or interest that you're paying. Understanding that, just educating people and educating clients. When does 50% cost you 100% as far as market returns? If the market returns 100%, next year it drops 50%. Let's say I have $100. Next year it drops to $50, or 50%, I've got $50, right? And you typically say, well, how much do I have to earn to get back to 100%? And people will tell you have to earn, 50% because you lost 50%. Well, that's not accurate, because 50% of 50 is 25, right? So you really have to earn 100% if you lose 50. So all these different concepts that people don't really think about. The power of indexed accounts. This works in our IULs and also in our annuities. Understand what it looks like and understand why it matters. High cost of waiting. Start now. Now is better than tomorrow every single time, right? And then this is the one that we were actually going to talk about before all my click-throughs, but types of retirement income. So what are your choices? And you probably are going to have some money in each of these, right? So types of retirement income, you've got tax now. That's your banks, your mutual funds, your CDs, your stocks. You've got after-tax dollars going into that. The growth, if you make any money in those accounts, it's going to be taxed each year as earned, and it's included in your state. Your 401ks, your IRAs, your 403bs are the tax deferred accounts. That's what most people use for their investments, right? They put before tax dollars in, so it's usually out of their paycheck. They get that deduction, right? They don't have to actually pay for that. If they pull it out prior to 59 and a half, they've got a 10% penalty. When you do pull it out, all growth and principal is taxed at distribution as income. Are taxes going to be higher or lower in the future? Nobody knows, but probably higher. You have limits on your contribution. You're limited as to how much you can put in. If you withdraw more than $44,000 a year as income, then 85% of your Social Security is going to be taxed. You have RMDs, which are required minimum distributions, meaning you have to distribute this money. Starting at a certain age, it's kind of fluctuated through the years. I think it might even be 73 now. It might be higher. So know what that is. But as you get into your 70s, you're going to have to access this money because the government wants their taxes, period. Right? If you don't access it by the time you're supposed to, they're going to penalize you by 50% of the RMDs that you should have taken, and it's included in your estate. Finally, we talk about the tax advantage piece of that. So life insurance, cash value, things like that. You've got after-tax dollars going in. No IRS 10% penalty for withdrawing it at age 59 and a half. Again, a lot of people use these when their kids are born and they use them instead of 529s. Well, they're going to pull that money out when their kids go to college, right? That means they're definitely earlier than 59 and a half. It doesn't matter. As long as there's cash value in there, that's your money. You can borrow against it however you want. The growth is 100% tax-free as long as you pull it out correctly. No contribution limits. Your death benefit is going to determine how much money you can put in, not the government or somebody, saying you can't do so much. Withdrawals don't cause Social Security to be taxed because it's not taxable. It's basically not income. It's a loan. And so it doesn't even go in your tax returns. No RMDs. You're never required to distribute it. No excise tax. It doesn't count against you for financial aid for college, which is huge. If you're using it for college planning, it's not included in your state, and it's tax-free income. So again, you're going to have probably money in all of these buckets, but most people only have money in the first two, right? They've got their checking account and maybe some stocks that they want to be a day trader and pretend like they can do that themselves. And then they've got their 401ks and their IRAs and the money that they've saved through their employment. So our job is to say, let's give you some tax diversification. Let's see what your options are. Let's see what your choices are. And then finally, this is going to go through, the difference of tax deferred versus tax advantage. So when we look at this in a tax deferred account, down at the bottom, that little small amount says zero tax on deposits. You don't pay any tax on your deposits. And then you've got that large amount of tax deferred growth here. Every penny of that in that red circle, which is the entire contribution, when it comes out as taxed as ordinary income. In a tax advantage account like life insurance or a Roth IRA, your after tax deposits, that small red circle at the bottom, that's where you're going to have tax. But all that tax deferred growth, there's zero federal tax dollars due for qualified distributions. We all know about living benefits, but I think it takes a minute to have this conversation again, or I think it's important to have this conversation again. Unfortunately, a lot of people are going to get sick before they die, right? It's just going to happen. That's just the way of the world. So whether it's a chronic illness, which means that you can't do 2 of the 6 activities of daily living, like feed yourself, bathe yourself, toilet yourself. Chronic, you need to think like long-term care type necessity, right? You need help with 2 of the 6 normal things that you need to do daily to live. Critical is like heart attack, stroke, cancer, something like that. And then terminal obviously means you're going to pass away within a certain period of time. Any of those things could devastate your retirement savings. And if you're beyond 100 days, Medicare pays 0 for any long-term care services. So that's important to know too, because a lot of people are like, well, I have Medicare, I'll be fine. Will you? Maybe. But I think it's important for them to understand. So it protects you from nursing homes and, all of those needs. You can see the annual cost down there below of, what it might cost. And Matt, well, I'm sure we'll show this again later, but there's a website that you can go in and put long-term care for your zip code. And it's going to tell you what that's going to cost. Why not have something that you can reach in and access if you need it to help you through that time instead of depleting all of your assets if you have assets. So I think that's a huge piece that it used to be a big crusade. I know it's still a big crusade, but I don't think we talk about it nearly as much as we used to, Jody.
No, not at all. But I will point out also on it, and you might have said this because I had to step away for 1 second, but on living benefits is more of a term conversation because we want the majority of the living benefits concept to be on their terms. So now also, go ahead.
I was just going to say that's a great point. So we talked about that term versus perm earlier. That's the other reason why you have 2 policies. The goal with that IUL is the cash value if we're writing this. Obviously, permanent death benefit later, but really that cash value. If we write a term to supplement for that need, for the dime need, and they have an event, they have a heart attack, obviously it makes sense to pull it from the term living benefits, not the permanent living benefits, because term has 0 cash value. You only win on a life insurance policy if you use it, right? So I tell all my clients about the term policies. I hope you lose. I hope you lose. Like I hope you lose every single penny you ever put in. But it's there just in case. So yes, great point, Jody.
Yeah, and also if you don't mind, let me if I'm just going to share something real quick. If you'll allow me to do that real quick.
You
Fantastic
should be
stuff.
able to.
No, somehow I never
Oh,
got it back. Except no
there's
worries.
2 of you.
Yeah, no worries.
You got it.
I got it. Okay, thank you. And also now listen, this is what she just showed you. This is that same information which she did a great job on. And I want to tell you, listen, when you're talking to the potential client on the front end, you don't dump all this on them. Okay, this is for you to understand how awesome that this product really is. But you also got to realize that you're going to lead with, remember this, we're storytellers. That's who we are. Storytellers, 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 storytellers in concepts. Okay, so the concept of this is that there is nowhere else in the United States tax code where you can put in money and have unlimited growth and never have access to it and also still allow it to grow over time. Make sure you have these things in place. Understand the whole thing of tax now, tax later, tax advantage. which we used to call that tax never, but we can't put that in writing. But that's the power of that. It's a very simplified version of this. But be able to go tell the stories, right? Have people understand that what tax rates are going to be in the future. But I love this. The reason I brought this up was this page. When you're talking to somebody previous to them giving you the information, when you're going into this, talk about the examples, whether it's, hey, you're climbing Mount Everest, that's one thing, coming down it's another. And they may say, what's that got to do with this? Well, growing your money is one thing, but what about when you pull your money out? And let them know that that's the part that people are wrong on. That you'll hear the Susie Ormonds and you'll hear the Dave Ramseys and you'll hear Clark Howard say different things. They never take into consideration that taking the money out of an investment. Accumulation's one thing, but so what about the other side? And then, of course, my favorite, which is this: if you were a farmer, would you rather pay taxes on your penny seeds or your $1 million harvest? And obviously, they're going to always say on the seeds, and you let them know that's what we do. That's what we do. It's just that simple. The greatest closers I've ever seen on this product were people who showed not a whole lot more than this slide, and then just went from there. And you explain that story to them. Have your stories down as it goes. So we got tremendous tools. And I do want to make one point on this, is that just for duplication purposes, that if you'll go into, if you want to go ahead and pull up, Kimberly, I mean, either one of us can, but you have it ready on the HGI Universe. If you could pull it up. I do want to go in. If you pull up, if you go into Abacus, and you go over to the FNA tools, the third thing down. If you pull up the FNA, full, and you see this presentation, that this particular if you hit 3 events there across the top, the second thing over on the little thing there on the top, there you go. If you go here, look, this presentation, just so everyone's clear, is the official turnkey presentation for our team to use that. Now this is the same presentation you just saw before, but in a very cleaned up, simplified way. Okay, this is your thing. Okay, now the reason we wanted to bring this up is that if you go to the top, so this presentation, just for the official, I love Core Concepts. Core Concepts is great for you to learn. It's a great overall presentation, but for speed, this one's very turnkey and very good one. Now the other piece though is the information. If you're going into comparisons, if you across the top there, if you hit IUL, where she just was in there, it's got everything you need. It is a fantastic piece. You literally can go through, because you tell somebody, hey, this thing's tax free, and they're like, if you scroll up a little bit, if you don't mind, all the way up right there. If somebody goes, well, how's it tax free? You hit tax advantage button right there. Everything's there. So you don't have to be a walking encyclopedia. You just need to know that everything about what she just said. Because listen, you just heard that and you go, oh man, that's awesome. Kimberly says it great. Zach's so smart. You don't have to know all that stuff. It's right here. All you got to do is get everything she just said. And if you scroll back, see how it says the financial, go back there, right there. IUL, the financial Swiss Army knife, or the Swiss knife. That is, if you don't know what that is, it's those knives that go through it. You can do everything. That's what this does. Okay. Now then go down to those comparisons, Kimberly. You take it away.
So this basically, down here you've got IUL versus other plans 1 and 2, and then investment fee versus IUL. But it's very similar to what we were just looking at, but just an easier, cleaner, probably checkbox of, if I'm looking for an investment vehicle, I would love to have liquidity and safety and rate of return and tax deferred growth and tax-free access and life insurance and living benefits and leverage. That would be my perfect plan. And IUL has all of these. If I want to say, what about my 401k? Liquidity might not be there on a 401k depending on your age, depending on if you're currently working. A lot of times we can't borrow against it. Safety, it's invest in the market, so it's as safe as the market is. We can definitely, hopefully, get market-based returns. tax deferred growth. It's not tax free when we access it. It doesn't have life insurance. It doesn't have living benefits, and it's limited on how you can leverage it. So you can go through each one of these and you can kind of see how they compare. And IUL checks every single box. I think it's just good to be able to compare and contrast with your clients. If we pull up this one, it talks about unlimited contributions, penalty-free withdrawals before 59 and a half, free of mandatory distributions, tax-free to beneficiaries, death benefit greater than the accumulation of the money, money for long-term care, and can I use it for children's education? And IUL says yes to all of these. And the other ones are either no or, they have some of them, but not all of them. So for everyone, as long as they can medically qualify and they can afford something, it makes sense, right? You just have to decide which problem you're solving for them, and make sure that they understand it that way. But I'll tell you again, based on the conversation that we were having in the beginning, before you sit down and explain this to a client, the first time you look at this and try to wrap your head around it, first of all, until you're confident in the field, you should be with a field trainer. Number one, first and foremost, somebody's going to be able to answer those questions for you. So know that. But also, before you sit down and go out there in the field with a client, read through this. Make sure you understand it. Make sure you know what you're doing, right? And then all those things are here. What if a Roth IRA versus an IUL? Like, let's talk about the difference, right? It's here. It'll pull it up and it'll go side by side on, what the differences might be between those two products. If we're talking about investment fees versus IUL fees, everything has fees, right? That's just the way of the world. So in a management account, you typically are charged 1.5% on the management of that money. And as that money grows, guess what? The 1.5% stays the same, but the distribution to the manager is bigger because you've got more money in the pot, right? In our world, a life insurance contract or the IUL contract is typically structured as a decreasing fee, right? So it starts at the 1.5%, but it decreases over time. So all of those things are just important to know, and just know where it is, know where you can access it. And then you've got some of the illustration pieces down below. But I think sometimes, and then this side over here, the IUL tools, that's one as well, right? Like you've got these different pieces here. I think that they're very similar to what we're just looking at. Yeah, I think it's the same thing. So you have so many tools at your fingertips that sometimes I think it's very confusing, because you're like, what should I pull up? What's the story that I tell them? Do I go through these bullet points, or do I tell them about, the farmer and the seed, or, a penny? Like, what was it? If you take a penny and you double it 30 times and don't pay taxes on it, you've got a ton of money. And if you do pay taxes on it, or like you've got over $1 million, and if you do pay taxes, you've got 30,000. Like, those are stories. Like, what do I say? So I think it's important to figure out what works for you, to know that you have all these tools at your fingertips, but then just choose it and use it, right? Over and over and over and over. If you do something different every single time, your teammates are, because they won't understand what to do, and your clients won't know either. And I think you'll confuse yourself just trying to go through all the different pieces. So pick something and run with it and tell your story and understand how it works.
That's a great point, because we're on a fine line. Dad's always talking about having diversification without distraction. And we have to have technology and tools without distraction. We got all these tools, and use them as whichever one, whatever style fits you. I can tell you that on that presentation where you went through on the core concepts, on that first page, it says pay yourself first. That's Mauricio's war cry. He says pay yourself first all the time, because we got a big issue, guys. We've got to get people saving money. There's many of you. There's 36 people on here, about 13 of them. I know your circumstances. I've sat in conversations, and you guys have thought, hey, I'm going to wait to get an IUL until things are better in my life. Guess what? They probably won't be better. That's not the way life works. It's kind of like starting the business at the right time.
And what if you have more
You know,
money, but then your health isn't
yeah,
there?
yeah, exactly. You may not be able to qualify in the future. And anytime you're past 45, you are on the wrong side of thinking you're going to get healthier. That's just the way God made us, unfortunately, and we try to, and hopefully we will. But what I was going to tell you was this: is it's kind of like the whole example of when's the best time to plant a tree? 30 years ago, but didn't do it then, so you better do it now. So get that mentality. I think our crusade, I want to put that word out there. What is our crusade? It's if you've never been around Primerica and you don't understand why they are the way they are, they have a crusade. They're on an absolute war. They believe that your eternal soul hangs in the balance of whether you get whole life or term or cash value. They just believe people need this information. You got to have that fervent feeling of people got to save money. And they got to start now. And odds are they need to start to save money and they need to be in the business. Because Eric and I, we stayed afterwards last night and I wrote up on the board. I said, hey, if you're a 45-year-old guy and you're sitting here trying to get $1 million or $2 million saved when you're 65, I don't know. Go save go make as much as you can here. Go save as much as you can, and at the same time, build a business that's going to take care of you financially also. So my point is that we've got to get people understanding they've got to do something. Don't give up, and they got to start somewhere. Kimberly made some good points. Yes, a perfectly positioned IUL is the best thing for somebody, but let's be honest. We're talking about, is it better to save here or here or here when most people save nowhere? How bucket, no bucket? You got the bucket A, bucket B, bucket C, right? Well, what about no bucket, which is where most people are? They need to begin. And I promise you, promise you that if you start saving $500 or $1,000 a month somewhere, you're like, I can't do it. Are you crazy? I can't. Yeah, you can. I promise you. If you do it within 90 days, it'll be like you don't even worry about it anymore.
Mm-hmm.
That's the way that it was. The one time that I saved before now, the first time I ever saved a lot of money was because I was in a room with my dad, and the top 12 guys that were in WFG had all of us. The Aegon had this thing where you could put in a percentage of your income up to it. And the first guy said he'd put in 2%. The other guy said 4%. The next guy said 8%. Well, I was at the end of the row. So by that time, the number had got up to wherever the max was. And I walked out there saying, heck, okay, I'll put in 20%. I got home, and when it was not a good thing going home because they were like, what? Are you crazy? We can't save this amount of money. Never thought about it again. But guess what? That money grew. And I needed that money along the way for different things. And I became successful, became a millionaire, a cash millionaire off of that. So you can do it. And this is us. And this is the crusade. If we're not the ones using this product, you are going to have a hard time selling it. That it is the best product. Let's talk real quickly in the last couple of minutes here about the comparison. Just on maybe, we can get in more of the objections next week. We go into that. There are a list of objections that people may throw at you. But if you don't mind, Zach, if you would end it with the thermonuclear part of this is that when you're coming down Mount Everest, the money's going to last. This is the way to have your money last the most in your lifetime is that you're able to go take the money out, but by taking it out of an IUL because of the loan possibilities that are there, it becomes incredible. This is why it lasts for 30 years versus a Roth IRA lasting for 10. So maybe just touch on that for just a second. And Mauricio, if you want to add anything as we wrap up, you can also, but go ahead, Zach.
Sure. So the bottom line, people have a big question. It's like, how can this income be tax free? How can I take this money out of this account and get lifetime in it? Why does 600,000 last so much longer coming out of an IUL than 800,000 does coming out of a 401k? And the bottom line is what we call the drawdown, how you actually draw that asset down. In a 401k or an IRA or a brokerage account, whatever, when you take that money out, that money's gone. You've spent it, you've used it, and it's also taxed if it's coming from a qualified account. So that means the bucket holds less. So it's growing even at a whatever rate, less is compounding. Whereas in the IUL, you have a cash value amount and you take a loan from that, which is how we recommend that you take out income from your IUL long term. It's got to be a participating loan. So I'm not going to split hairs, but if it's set up properly, you're going to take a loan from that cash value. What you're actually doing is borrowing money from the insurance company and using your cash value as collateral. So you will continue to take loans from the insurance company, and then your entire bucket of money that's still sitting there is still growing and compounding. And so whereas in a 401k or in a cash account, you take money out, you spend it, it's gone. You have a smaller bucket compounding for you. With an IUL and participating loans, 100% of that money that you have amassed in your cash value is still growing for you. How does that work? How is this tax free down the road? The big deal here is death benefit proceeds from a life insurance policy are tax free if it's structured correctly. So you'll notice that, yes, all of your loans are going to be repaid. So you borrowed them and you took money out in the form of loans. Loans are not taxable by the IRS at this point in time. That would be a little bit silly. So proceeds from a loan are not subject to income tax, and neither are proceeds from a life insurance policy. So upon your passing, your death benefit pays off all of your loans. Boom, tax-free money, paid them off. The death benefit that comes to your heirs is what's left. That's what you see in the illustrations when you look at that and calculate distributions. So nowhere can you use your money and not actually have to take it out except for inside a policy or a vehicle like this. It makes that line, it's not about how much you make, it's about how much you keep. It's not about, what the number looks like on paper. It's about how long it's going to last. So we have some fantastic strategies, from the life income annuities to these type strategies like this, where you can literally not run out of money, even if you spend through every dollar that you had sitting there.
Absolutely. And that's fantastic. And we're going to be going over these kinds of points. These are things people have to know. And then at the same time, you need to know about third party validations. There are great books. There's Patrick Kelly. There's David McKnight. There is great pieces by Doug Andrew all over the internet that are powerful. But it comes from you. Listen, if you are in the warm market, and I don't know why people fight going to a warm market. It's crazy. Giovanni and I were on a call right before this, and people come in, they're like, "Hey, where can I get the leads?" I'm like, "Why do you want to sell somebody who's probably not going to keep something because you have no relationship with them?" Whenever here, we're all for referrals. You think about the power. It's so important that you get in the right market because they buy you. They buy you. They have the trust for you. That's so important. Kimberly, go ahead if you want to say what you just
Yeah,
texted me. Yeah,
I just
I
want to say it
agree.
really quickly. So,
You bet.
we all in this world of social media see random posts, right? Especially on Facebook. I don't know these people. It just comes up in my news feed. And one of them came up earlier today that said no IULs. And it's like this big, slash across it. And it had a lot of this misinformation that was written under it. Like, I wanted to go back and be like, that's wrong. Just kind of point all the things that were incorrect. But don't ever do that. First of all, I will tell you, someone that I know did comment on that, which is the only reason it was in my news feed, right? So when you as a friend comment on a post like that, you might think you're doing the right thing, but I never probably would have ever seen that post because I didn't know this person. I don't follow this person. This person has nothing to do with us, right? But because my friend commented, it's now in my news feed, and I'm like, oh, what are they talking about? So when your intention is to argue your point or whatever, a lot of times you're putting things in your clients' heads or your friends' heads that they never would have thought about before, right? Because it shows up in their news feed. But you're never going to change people's minds. You're never going to be like, it's like political conversations, religious conversations, IUL conversations, like, just don't comment on it on social media. If you want to make your own post about what's so amazing and great and it's compliant, go into Zach's term, fine, feel free, but don't comment on other people's. Don't try to correct them. Don't try to prove that you're right and that they're wrong, because it's never going to work, ever, ever, ever.
Yeah.
So,
It's
and
like
it
trying to get in a battle with a skunk.
unintendedly tells your family and friends that you're actually friends with, right? Like, things that you don't even want them to ever think about. So,
No, not at all. Lean into it, go through, give them the information. Hey, here's what's awesome about what we do. If somebody from Primerica who's just making all these crazy statements, if no one has more bad press written about them than those guys, first of all, nobody. Okay. But if they're out there doing their thing, even if a client needed an IUL, they couldn't sell it with us. If you sit down with somebody and they say to you, hey, IUL's not for me, we can sell term. We can do by term invested difference. That sets us apart. That's a great point to somebody. say, hey, yeah, that's why that guy can't even sell this product. Oh, okay, that's why he's saying that. I'm just telling you, have those conversations, but don't get in it. I promise you, the little people are the ones that get in those wars on the keyboards. You just don't want to do that. You can't do it. It ain't worth your time. Don't give them the energy. Everything's in the new. We're not in the resurrecting the dead. We're giving birth to new babies. That is what we're all about as a company. Mauricio, anything you want to add at this? We certainly did an ode to what you put together because we went over and showed the power of the technology. So, what you got?
Well, first of all, hey everybody, excited to be here with you all. Thank you, Kimberly and Zach, for everything you added today. Listen, I think you can have a base presentation. If you have a base presentation, then you go from there. All the rest of the tools are tools that, if you know where they're at, you can just go back and use it. I have a base presentation, and I'm speaking to this idea of confusion. I believe everybody here is very smart, and if you know where things are, your brain will, and depending on the case you have in front of you, you will know what tool you need to reach for to do that job. But you need to know where the tool is to be able to reach for it. Many times, you aren't going to use 90% of the things you've got if you are presenting with your base presentation. I do my 15 minutes of magic, go to my FNA, find the lump sum monies and the monthly monies, and go through the gaps. And whenever I'm having to talk about the IUL, I can educate them clients on what the IUL is. So that's why Abacus was built as a one-stop shop, if you want to call it, one place where you have all the tools you need, not to confuse you, but to make sure that you have every tool you could possibly ever need to do the sale. And that's what it is. If there was one thing I'd share with you is learn that base presentation. Um, and the 15 minutes of magic is my favorite
And
one.
by the way, the base one he's talking about is the one that I said a minute ago in Abacus, right
Yeah.
there. That CX curve, that presentation. That's what it is. That is a combination of the core concepts of the core concepts. The X curve that built Aki's whole team and everything, the 15 minutes of magic that Mauricio has, is
Yeah.
that exact
Yeah.
presentation right
Because
there.
you have to remember one thing. I think Kimberly said this is that people are buying you. I think it's Kimberly said it or Jody, but we've heard it also many times is that people do business with the people they like and they trust. So if the people already like and trust you, right? They just want to know when you go to that 15 minutes of magic, you are demonstrating competency and you're demonstrating knowledge. Just with those concepts, you are above 90% of most of the people that are out there. Just give them that picture. And then they feel, okay, so I'm in good hands. And then you know that the products we have are top notch, right? And you'll be able to guide the client into closing their gaps with the term insurance that they need, the permanent insurance if they need, the annuity if they need, the will and trusting if they need, and even the managed money there with the great Jack Odie. So I think we're in better shape than ever before. And yeah, that's it, Jody. I want to keep it
Hey,
short. Maybe
no,
invite
that
you
was
guys
fantastic. To be
2:30.
honest with you, that may be the most powerful thing that you've ever dropped on here before. I love it. And let me tell you one other thing, one tiny thing about overcoming objections. You anticipate objections, like if or concerns, that's fine, but don't go out and lay it out in front of somebody. Don't throw negatives out when it's not even there. Let things come up, and then you can handle them as you go forward. And I will tell you this: let's say that the company says, "Oh, the insurance company wants to sell you. They want to sell you." IUL or whole life because they make more money than if they sell you a term. Do you know that companies they built those insurance companies are built off selling term? You know why? Why do you think they make so much more money off term, Giovanni? Anybody? I know Zach and Kimberly could have guessed it. Or why do you think?
Because they're mostly pure profit for insurance companies, less than 4% payout.
Here you go. Let's just say less than 10%, because I've heard 4, 5, 8, 6. Let's just say less than 10%. Less than 10% of all term policies ever pay out. That means it is pure money to the house, to the casino, if you will. They make fortunes selling term insurance. So don't ever think that's the game. So great point, Gail. So this is great stuff. This ought to give you power to go open your mouth. Know that we got all the tools. We got this training. We got the technology. We got the products. We have the best people in the world that can help support us. The 25th is going to be amazing, virtually and at the home office. It is almost a fly-in thing if you're from around somewhere else. Fly into Atlanta if you want to come to it. It's that good of what it's going to be. So great job today. Thank you. Thanks for the preparation, Kimberly. And thought it was pretty
Hey,
cool to have.
commercial
Yeah.
2:30. If you want to
Yes.
join me
Yes.
for the technology training, 2:30, I'll be
Yes.
right on the Zoom. To get the email from Colton. So join me if you can. Take care.
And we will have the flyer and the landing page out to you by the end of the day. I've been communicating with Colton during this, and they're doing a real world-class job on it. And Mauricio is prepared. It's going to be awesome. And you can go, make it your own by cloning this this page if you want to make it your own, or you can just use the one that we've got. So great stuff. That gives us 2 full weeks to go prep this baby. Let's go do it. Thank all of you. Appreciate you. Have a great